Welcome to the Let's Grow Movement podcast.
Great to be here.
Today, we're really diving deep into the Portland, Oregon real estate market. We've gathered, well, a whole stack of recent reports. Looking back at the last 90 days, so Q1 2025, and trying to give you a clearer picture, hopefully, of what the rest of the year might hold.
Yeah, and we're covering quite a bit. Residential, office, retail, industrial, even land.
Exactly. The goal today really is to cut through all the noise, all the data,
Right.
and just pull out the key insights from you, whether you own a home, maybe you're thinking about buying, or you're an investor.
Or maybe you're just curious about, the local economy.
Absolutely. So we'll unpack the numbers, sales, prices, inventory, and try to understand the forces shaping each part of this market.
Sounds like a plan. Where should we start?
Okay, let's kick things off with the residential market. How did Q1 2025 actually look for people buying and selling homes here in Portland?
Well, the interesting thing was the consistency. Home sales were pretty steady right through the quarter across the metro area.
Steady, okay.
Yeah. And if we look specifically at March, we saw 2,667 new listings hit the market.
Wow, that sounds like a lot.
It's a good number, up 10% compared to last March, actually. And buyers seemed interested, too. Pending sales in March were 2,199.
Okay, and how did that compare?
That's up slightly, about 2.9% year over year. So listings up, pending sales keeping pace.
And did those actually close, the pending ones?
They did. Closed sales also ticked up a bit. 1,613 homes closed in March.
Right.
That's up 2.2% from March 2024. And February is actually quite strong. Sales are up nearly 18% compared to the year before.
18%, okay.
Yeah, so when you look at the whole first quarter, Q1, it was roughly 4,200 homes closed across the metro.
Which for that time of year.
Exactly. For what's normally a slower season, that's a healthy pace.
Okay, so more homes coming on, selling at a decent clip. What about the actual number of homes available? The active listings, the inventory levels?
Right. This is where things get, noticeably different from last year. Active inventory, the number of homes for sale, is up about 30% compared to last March.
30%? That's significant.
It is. And it translates to about 3.0 months of housing supply in March. A year ago, that was more like 2.3 months.
So more choice for buyers then?
Definitely more choice. Drilling down, end of Q1, Portland proper had maybe 2,100 to 2,200 active listings. Over 3,100 if you include the suburbs.
Okay. And why the jump? More sellers or things sitting longer?
It's a bit of both, really. More sellers are listing, maybe seeing prices stabilize. And yes, homes are staying on the market just slightly longer on average. Suggests buyers aren't feeling quite the same urgency, maybe.
That must feel like a relief for buyers compared to the last few years.
It definitely gives them more breathing room, more options than they've had. But, perspective is key here.
Right.
While inventory is up year over year, it's still actually below pre-pandemic levels. Like maybe 6% lower than what we saw back in 2017 to 2019.
So not exactly a flood of homes.
Not a flood, no. Not an oversupply. That 3.80 months of inventory. It suggests we're moving towards balance, maybe leaning slightly towards buyers, but it's not a deep buyer's market.
Okay. What defines a balanced market, typically?
Generally, you'd look for around 5 to 6 months of inventory for a truly balanced market where neither side has a big advantage. So 3 months is, it's getting closer to balance, but still leaning a bit.
Got it.
Yeah.
And how fast are these homes actually selling? You mentioned they're sitting slightly longer, but what are the days on market numbers telling us?
Yeah, this is interesting. Despite more homes being available, the ones that are selling are actually moving faster than last year.
Really? Faster?
Yeah. The median days on market in February was just 36 days. Last February, it was 50 days.
Wow. Okay.
And by March, the average total market time for homes that closed dropped to 71 days, down from about 80 a year ago. And maybe even more telling, the median time to actually get an offer accepted to go under contract, that was down to about 13 days by the end of March.
13 days. So the good ones are still flying off the shelves, basically.
Pretty much. On average, a typical Portland home might get around 3 offers and go pending in about 25 days.
Okay.
But those really hot listings, great condition, prime location, they can definitely go pending in like 5 to 13 days, often at asking price, sometimes even higher.
Right. And the flip side.
Yeah. There's definitely still the flip side. We see listings that get kind of stale,
Right.
sitting for over 2-3 months. Often those are the ones that were maybe priced a bit too ambitiously up front, or they need some work.
Makes sense.
Ah.
Okay, so buyers have more choice, good homes sell fast, Let's talk dollars and cents. What's happened with residential prices here?
Overall, prices have been, I'd say, stable to maybe modestly rising in early 2025.
Stable to modest rise. Okay.
The median sale price in February citywide was about $510,000.
And how does that compare year over year?
That's up 6% from February 2024. By March, the median for the whole metro area ticked up a bit more to roughly $542,000.
Okay. And list prices. Where are sellers starting?
Median list prices are also kind of in that mid-$500 range. For the metro, it was around $600,000 in March. Interestingly, that was actually down just slightly, less than 1% compared to list prices last March.
So sale prices up year over year, but list prices maybe leveling off a bit.
Sort of signals that sellers are maybe getting a bit more realistic from the get-go, and it shows in the sale-to-list price ratio.
Right. How close are sale to the asking price?
It's been right around 100%. February was like 100.1%. So on average, homes are selling for what they're listed at.
But that's an average, right? There's variations.
Definitely. About 30-35% are still selling above list price, but then again, 45-50% are selling below. So more are selling below than above, which also points to that balance shift.
And are sellers dropping prices more often?
Yes, we have seen an uptick in price reductions. This spring, maybe 23-24% of active listings had a price drop. That's higher than in 2024.
So sellers adjusting to meet the market.
Exactly. But big picture on prices, it's generally flat to slightly up. Zillow's index for Portland showed just a 0.7% rise over the past year. Listing prices essentially flat year over year.
So we're out of that crazy appreciation phase.
Oh yeah, we've definitely transitioned. It's more like mild growth, maybe consolidation, after those wild years of 2020, 2022.
Does the price vary a lot depending on, say, a single-family home versus a condo?
Absolutely. Big difference. Single-family detached homes, they're the bulk of sales and still the priciest. You're looking at mid to high $500 for a typical one, median-wise, across the metro,
Okay.
condos and townhomes. Much more affordable generally. Low to mid $300 median in the core parts of Portland.
And small multifamily, duplexes, triplexes.
Those usually fall somewhere in between maybe $500K to $800K, depending on size, condition, and location. Demand's pretty solid there from investors and owner-occupant.
Where are most sales actually happening price-wise?
The vast majority are under $750,000. If you look at active listings, maybe a third are under $500, another third between $500K and $750K.
And above that.
About 20% are in that $750K to $1 million range, and then only about 10% are listed over $1 million.
And how's that luxury million-plus segment doing?
That's been softening a little bit, actually. Homes in that range seem to be taking longer to sell. Could be fewer high-budget relocators, maybe more sensitivity to interest rates at that level.
Interesting. So who's buying these homes in Portland right now? Are the buyer demographics changing?
Yeah, we're seeing some definite shifts. One big one is fewer first-time buyers.
Really? Why is that?
Affordability is the main driver, just like nationally. Nationally, first-timers were down to like 24% of buyers recently from over 30% the year before. Portland likely mirrors that.
So who makes up the majority then?
It's mostly repeat buyers, people moving up or downsizing, and folks relocating here. Often they have equity from a previous home or higher incomes.
Okay.
And interestingly, baby boomers are now the largest share of buyers nationally, about 42%. We're seeing that here too, more older buyers, often using cash or making big down payments.
Wow. Boomers leading the charge. What about millennials and Gen X?
Millennials are still a big group, maybe around 29% nationally, definitely active here. And Gen X, they often have the highest household incomes, nationally around $130 median, so they're very much in the mix too.
It sounds like you need a pretty solid income to buy right now.
You really do. Median buyer income nationally is low $100. With a $540 median price here and current rates, that monthly payment, P&I alone could be around $2,800 with 20% down. That takes a good income.
And how are younger buyers managing, especially with down payments?
Mortgages, obviously. But we're also seeing a lot of help from family. Gifts for down payments are pretty common, especially for millennials.
Right. And are investors a big factor, or is it mostly people buying homes to live in?
It's still mostly owner-occupants. Investors are definitely present. You see some activity, but they aren't dominating the market.
Okay.
A lot of what looks like investor activity might actually be repeat buyers deciding to rent out their old place, or maybe someone buying a second home.
And cash buyers.
More common at the higher end, yeah. Those boomer buyers we mentioned, some relocators bringing cash from pricier markets. But overall, the main demand driver is still people looking for their primary home.
Gotcha. Portland's always been a magnet for people moving in. What are the migration trends looking like now? Still strong.
In-migration is still happening, yeah, but maybe the pace has moderated a little bit compared to a few years ago.
Wow.
Looking at Q1 data, about 78% of buyers were already local. But we still see people coming in.
Where are they coming from mostly?
Seattle is still the #1 source. We
Wow.
saw a net inflow of about 3,600 people looking to buy here from Seattle. LA and San Francisco are still big sources too.
And where are people leaving Portland for?
About 22% of searches were from people looking to move out. Top destination, Bend, Oregon.
Oh, Bend. Always popular.
Always. Phoenix, Arizona was #2, and then some of the Oregon coast towns like Newport.
So some outflow, but still net positive inflow overall.
Yeah. Overall, still net positive migration, and often those folks moving in tend to have higher budgets, which does help support demand, especially in certain price brackets.
Okay, that paints a pretty clear picture of the residential side balancing out, more buyer choice, but still competitive for good properties.
Yeah.
Let's shift gears to commercial real estate. What's the big story there?
Well, the commercial side is definitely more of a mixed bag right now in
Yeah.
Portland.
Mixed bag, how so?
We're seeing really different stories depending on the sector. Industrial is frankly booming. Retail is showing stability, even improving in spots. But office is still facing some serious headwinds, and land is kind of finding its footing.
Okay, let's tackle the one getting the most headlines first. The office market. What's the latest there? Still challenging?
Yeah, challenging is putting it mildly. It continues to be the real soft spot. Office vacancy climbed again in Q1, hitting 24.9% across the metro.
Wow, nearly a quarter empty? Is that a record?
It is a record high for Portland, and it's up significantly from a year ago. Demand is just weak, largely thanks to remote and hybrid work sticking around.
And are companies still shedding space? Net absorption?
So still negative, yeah.
Yeah.
We saw negative absorption again in Q1. About 423,000 square feet more space was given back than leased up.
Oof. Is it bad everywhere or worse downtown?
Downtown is definitely feeling it the most. Very high vacancy there. Some suburban areas like Clark County over in Washington are doing a bit better. Vacancy around 8.3%. But overall, yeah, it's tough.
What are landlords doing? Lots of concessions.
Definitely. Lots of concessions, tenant improvement allowances, free rent periods, anything to try and attract or keep tenants. We're also seeing that flight to quality you hear about. Meaning tenants, if they are moving, are often upgrading to nicer, newer buildings, sometimes for similar or even lower effective costs than their older space, thanks to those concessions.
So what about sales? Are office buildings trading hands?
Very, very little activity. Sales volume is way down. Listings are piling up, but transactions are scarce.
Why so slow?
Combination of factors. High vacancy makes buyers nervous. High interest rates make financing expensive. And there's often a big gap between what sellers want based on old values and what buyers are willing to pay today.
Right.
So buildings that do list often sit for a long time. 6 months, 12 months, even longer isn't uncommon. And leasing vacant space also takes much longer now.
And what's happening to rents and property values?
Rents are under pressure, especially effective rents once you factor in those concessions, particularly for older Class B buildings downtown. Even in the nicer Class A buildings, while the quoted rent might look okay, the actual rent paid can be much lower. And sublease space adds more competition, often at discounted rates.
And values? Have they dropped significantly?
Oh, yeah. Office property values have taken a substantial hit because of all this, plus the higher interest rates. We're talking declines of 20%, 30%, maybe even more from the peak back in 2019 or so.
So the outlook for office for the rest of 2025?
Still looks pretty challenging, honestly. Vacancy is likely to stay elevated, maybe even tick up a bit more. Rent recovery will be slow. Landlords are focusing on survival, retaining tenants.
Any bright spots? Conversions, maybe?
There's talk definitely about office to residential conversions, but those are complex, expensive, take time. It's not a quick fix. So yeah, near term, it remains a tenant's market and tough for owners. Things might have to worsen a bit more before they get better.
Okay, let's pivot, hopefully to something a bit brighter. How's the retail market looking?
Retail is definitely a more stable story, actually showing some improvement in certain areas.
Improvement, that's good to hear. What's the vacancy rate?
It held pretty steady in Q1 at 4.5%, which is actually better than a year ago.
4.5%, that sounds pretty healthy.
It is, yeah, relatively low. Absorption was basically flat in Q1, slightly negative, but almost negligible. Demand is holding up.
Where is leasing activity strongest?
Mostly in the suburban submarkets. Clark County, the west side, they saw good activity. Well-located neighborhood shopping centers are generally doing well.
And malls, downtown retail.
More of a mixed picture there. Some doing okay, others still finding their way. But overall, the sector feels much more balanced.
How about retail rents and new construction?
Rents have been pretty stable, maybe inching up slightly for the best. Prime spaces. There hasn't been a ton of new retail development recently, only about 91,000 square feet under construction right now.
So limited new supply is helping keep things stable.
Exactly. Controlled supply, steady demand. It helps maintain equilibrium.
Are investors interested in Portland retail properties?
Yeah, sentiment has definitely improved there. We are seeing interest, especially for those stable neighborhood centers or maybe single-tenant properties with strong leases.
What kind of returns are they looking for? Cap rates?
Cap rates are generally in the 6–7% range for good quality, well-leased retail. That can be attractive compared to other options right now. Tenant inquiries are steady too, gyms, discount stores, boutiques, restaurants.
So the outlook for retail for the rest of the year.
I'd say cautiously positive. Vacancy should stay low, probably in that mid-4% range. Maybe some modest rent growth in the best locations. Suburban retail looks solid. Downtown is still a question mark, but has potential for improvement with revitalization efforts. Generally, retail seems to be on a pretty stable footing.
Okay, good news there.
Mm-hmm.
Now let's talk about the industrial and warehouse market. You said earlier it was the standout.
Absolutely. Industrial remains the brightest spot in Portland's commercial real estate scene. Very robust.
What kind of numbers are we seeing?
Absorption.
Really strong. Positive net absorption of about 1.0 million square feet just in Q1.
1 million square feet. Wow.
Yeah, demand is just consistently high for warehouse distribution manufacturing space. Big leases signed recently by companies like Grocery Outlet, Gourmet Foods, Tilray.
And vacancy, with all that demand, is it's super low.
It actually held roughly flat in Q1, around 6.1%.
Sad. Why didn't it drop with all that absorption? Mostly because we had some significant new construction projects delivered, adding new supply to the market. And a bit of sublease space came online too. But the key takeaway is that underlying tenant demand is very strong.
Makes sense. What about rents and new development in industrial?
Rents have been trending upwards for a while now because supplies have been tight. Landlords still have pretty good pricing power in many areas.
Is rent growth still really high?
It's moderated a bit, more into the single digits year over year now, not the crazy double-digit growth we saw maybe a year or two ago, but still definitely positive. High 70 cents to low $0.80 per square foot per month NNN in prime spots.
And are developers still building?
Oh, yeah. There's a healthy pipeline of new industrial projects under construction. Investor appetite is also very strong for industrial.
So sales are active then?
Well, investor interest is high, but actual sales volume has been a bit subdued. Partly because there just isn't a lot of prime industrial property available to buy, and partly the higher interest rates impacting deals.
What are cap rates for industrial?
For good core industrial properties, maybe around 5.5% to 6%, still quite low compared to other sectors reflecting that strong demand and confidence. We are seeing some owner-user purchases too, companies buying buildings for their own operations.
And land for industrial development.
Very much in demand, especially in corridors like the northern suburbs or out east in Multnomah County. Prices for that land have generally been going up.
So the forecast for industrial for the rest of 2025, still positive?
Definitely positive. Portland's location is great for distribution. Manufacturing is growing. We expect demand to stay healthy. Vacancy will probably bounce around that 5–7% range as new supply comes online. Rents likely to keep rising modestly, maybe low single digits. Still very much a landlord-favored market overall.
Okay, that covers the main commercial types. What about land itself? Development sites.
Land is, again, kind of mixed depending on what it's zoned for or intended for.
How so?
Well, for residential land, there's still good demand for sites where you can build multifamily, especially infill projects. But high construction costs are making developers a bit more cautious about speculative buys.
So permit-ready sites are preferred.
Exactly. Well-located land that's already permitted or close to it that still sells well. Land for big suburban single-family subdivisions. Demand is more moderate there. Sites might sit longer.
And commercial or industrial land?
Industrial land, as we said, is hot in certain areas. Prices are up. Land for office development. Very little demand right now, obviously. Retail land. Steady demand in growth areas. Redevelopment sites can be complex. Zoning, permits.
Have land prices dropped much?
Not dramatically, no, but the pace of sales has definitely slowed down. If interest rates stabilize or maybe dip later in the year, we might see more activity pick up. Big projects like the Broadway corridor or the I-5 Rose corridor could also influence land values nearby.
Okay, so we've covered Q1 for residential and commercial. Let's look ahead. What's the forecast for the rest of 2025, starting with residential?
For residential, I think we're looking at continued stability, maybe a slight increase in sales volume through the summer, which is typically the peak season.
So a strong spring, summer potentially?
Yeah, likely a solid late spring and early summer. Activity might cool off a bit again in the fall and winter as usual. For the full year, sales volume could end up similar to 2024 or maybe slightly higher. A lot depends on interest rates, though.
And home prices. Big gains, drops.
Probably not big moves either way. Most forecasts point to minimal appreciation for the full year, maybe somewhere between 0% and plus 3%, so essentially flat in real terms.
Could we see prices dip year over year at some point?
It's possible we might see some small year-over-year declines reported mid-year, depending on the comps from last year's peak. But the overall trend looks pretty stable, median prices likely staying in that mid-$500K range by year-end.
Any difference between price segments?
Yeah, probably continued softening at the very high end, the luxury market, but maybe slight gains for entry-level homes where demand is still quite competitive.
What about inventory and construction?
Inventory will likely peak in late summer, maybe hitting around 4 months of supply. New listings should continue to run higher than last year, maybe getting closer to pre-pandemic norms.
And new homes being built.
We'll see more new apartments finishing up. Single-family construction might remain a bit slower due to costs and rates. Some affordable housing projects are adding units too, which helps at the margins.
Who do you see driving demand for the rest of the year? Buyer demographics.
Millennials will remain very active, but boomers and Gen X will have a huge influence, especially with downsizing, moving, and cash purchases. First-time buyer demand will likely stay constrained by affordability unless rates drop significantly.
Any change in investor activity or migration?
Investors might become a bit more active if prices stay flat, looking for deals. In-migration could get a small boost if Portland's economy stays relatively strong compared to other areas.
And the big elephant in the room, mortgage rates.
Yeah, that's the key variable. Most forecasts expect rates to stay somewhat elevated, probably in the 6% range for much of the year, maybe high sixes, low sevens at times.
So affordability challenges persist.
Definitely. That will keep a lid on price growth and overall activity. We'll likely continue seeing creative financing, seller rate buydowns, adjustable rate mortgages, FHA loans being important. There's potential for rates to dip late in the year if inflation really cools, but that's still uncertain.
So bottom line for residential in 2025.
I think it's a year of finding balance, a stable market. Buyers get more selection and a bit more negotiating power. Sellers need to price realistically and have their homes well prepared. No big crash, but no big boom either, more like consolidation.
Okay, consolidation for residential. Now let's forecast the commercial side for the rest of 2025. Starting with office, does it get any better?
Probably not much better in 2025, unfortunately. The struggles likely continue. Vacancy might even creep up a bit more, maybe reaching 26–27% by year end.
Ooh.
Yeah. Expect high rent concessions to continue. Very little, if any, new speculative office construction will start. Focus will be on those office to resi conversions, maybe some pre-leased build-to-suit projects.
So landlord focus is just survival.
Pretty much. Retaining tenants, managing costs. Property values will likely fall further before they bottom out. Investment activity will remain muted. It probably gets worse before it starts getting better, maybe into 2026.
Okay, how about retail? You said it was improving. Does that continue?
Yeah, I think retail sees gradual improvement through 2025. Vacancy might tick down slightly, maybe towards 4.0, 4.3% by year end.
What kind of retail does well?
Growth in things like experiential retail fitness, entertainment, unique dining. Also, necessity-based and discount retail, we could see slight rent upticks for prime spots, limited new development helps.
So suburban retail stays strong. Downtown improves.
Suburban should remain strong. Downtown is still the wild card, but there's potential for improvement if foot traffic increases and revitalization efforts gain traction. Investment activity should be moderate. Retail should be on slightly stronger footing by the end of the year.
And industrial. Does the star keep shining?
Absolutely. Industrial should remain the brightest sector. Expect strong absorption to continue, maybe another 2–3 million square feet net positive for the full year.
Wow. Vacancy stays low then.
It'll likely oscillate in that 5–7% range as new buildings deliver, but demand should keep pace, maybe closer to 5–6% by Q4. Rent growth should continue maybe around 5% year over year.
Construction and investment stay strong.
Yep. Healthy construction pipeline, strong investor interest continues, although deal volume depends on rates and availability. It remains a landlord-favored market.
What about multifamily, the rental apartment market?
That should remain pretty stable. Apartment vacancy might inch up slightly, maybe a 5–6%, as a lot of new supply finishes construction. Rents are forecast to grow modestly, maybe around 3% or so. Still a solid sector.
And land and development activity overall?
Developers will likely remain cautious but strategic. If rates stabilize or dip late in the year, we could see an uptick in development applications and land purchases looking ahead to 2026. Local projects, like Intel expansions or the Max Light Rail work, will also influence specific areas.
Are there any big risks or wildcards that could change these forecasts?
Sure, a significant economic recession would obviously impact everything negatively. On the flip side, a sharp drop in mortgage rates could reignite the housing market more than expected. Major corporate decisions, big expansions or contractions always have an impact. And, continued progress or lack thereof on some of Portland's urban challenges could influence perceptions and investment, especially downtown.
So pulling it all together, the overall outlook for Portland real estate by the end of 2025.
I think we'll see a market that's found more balance and is in a phase of recovery, but recovery at different speeds. Residential should be stable. Commercial is mixed, industrial and multifamily thriving, retail stabilizing, office still working through its issues but maybe nearing a bottom. Investors and developers will find opportunities, but they'll need to be selective. Really a year of consolidation and adjustment.
Okay, let's try to unpack what all this really means for you, the listener.
Yeah.
It sounds like the Portland real estate market in 2025 is, well, it's complex, isn't it?
It really is. You've got the residential side finding this new equilibrium. That means, more breathing room for buyers, which is good, but sellers really need to be strategic about pricing.
Right. And then the commercial side is just so diverse. Industrial's just charging ahead.
Leading the pack, yeah. While other sectors like office are navigating some pretty unique, pretty significant challenges, retail's kind of in the middle, finding its way.
It seems like the interplay between these sectors and with the bigger economy is where things get really interesting.
Totally. Keep a very close eye on interest rates. That's such a key lever, especially for how the residential market is going to feel day to day.
And for commercial, those efforts to revitalize downtown, that could really shift things for office and retail down the line, couldn't it?
Potentially, yeah. Big impact if those efforts gain real traction.
So what does this all mean for you listening? I think it means really understanding these different currents is, well, it's crucial, whether you're making personal housing choices or maybe business investment decisions.
Exactly. The market isn't just one thing. Each sector has its own story unfolding. And knowing those details, understanding the nuances, that can give you a real edge.
Which brings up a question for you to think about. How might these trends we've talked about specifically impact your situation or maybe your future plans here in the Portland area?
Yeah, it's worth mulling over how your own goals fit into this evolving picture.
We really hope this deep dive has given you a clearer perspective on where things stand and where they might be heading.
And if you want to dig even deeper, definitely look into some of the specific market reports and data sources out there.
Thanks so much for joining us on the Let's Grow Movement podcast.